I'd like to ask you, Nick Earls and Eric Dinicola, uh, what is the biggest risk?
I think in the business we're in, and because we're in, a few sort of real estate verticals, if we focus, say, just on the condo development, um, I feel like there are two major risks. One is sort of the political and municipality risk in the city you're building. And I'll get into that a little deeper in a second. And then the other one is sort of a macro risk right now that we're in, potentially, the Fed raising rates over the long term. It does, potentially reduce buying power for individuals, and we're selling condos. So the way we kind of we don't necessarily think at our firm that's going to happen. So we're at least not in the immediate future. There's potentially too many consequences for that on a macro scale. But these two things that we see. So when you're dealing with a city like Boston, there's so much red tape that if you get into a project without sort of a backup plan, or a worst case scenario, still kind of breaking even. For example, a very simple way to put it would be you buy a property in a 3-family zone. You should make sure if you get denied for your variances, you get denied the zoning board of appeals, you could still develop a 3-unit property that would at least break even, the worst case, because by the letter of the law, you can do that. You don't need special permission. You're in a 3-family zone, you're allowed. So look at that scenario. If that scenario loses a lot of money, then you probably shouldn't get into it without protecting yourself and minimizing that risk, either by having a contingency that Nick spoke about, or some sort of backup plan. So that's kind of the local political municipality risk, because in Boston is just very difficult to develop, and it's getting harder and harder. Not even every year; it seems like every month. There's much more red tape, and like I said, the other thing would be more interest rate risk when you're selling condos. Buying power does go down for buyers as interest rates go up. So one way we kind of, try to eliminate that is we say, okay, look, where's the market at right now? A lot of developers project out, oh, the market's increased at this rate. This is the value of homes, a year ago. This is what they're at now. I'll continue with that and project that I'm going to sell them for this much higher than they are now. We don't do that. We project as is, even if it's 2 years out, even sometimes with like a 10% hit to see, would this still work? And if it doesn't, we second guess that project. So that's kind of how we try. That's how two of the biggest risks we see. And those are kind of the ways we would eliminate them in our business. But also just the idea of diversifying within real estate, where you have the different asset classes that we have and the different types of verticals that we're involved with, is sort of another layer to risk minimization.